our business model is to securitize Bitcoin. So we're a Bitcoin treasury company. That means we hold Bitcoin as our primary treasury asset, and we offer securities to investors that they need to give them they slice various risks of performance, volatility, and risk off of Bitcoin. So some people want low risk, low vol, low performance uh, securities, and to them we would sell them a preferred stock like Strife, or convertible preferred like Strike, or a convertible bond. Right. The convertible bonds are like 70 delta instruments, and Strike is a 30 delta instrument, and Strife is a 0 delta fixed income instrument. And one of them looks like a 20 vol, and one of them looks like a 40 vol, and one of them looks like a 60 vol. And then when we take the leverage from selling those securities, uh, we feed that back into the equity so that the equity itself ends up being higher vol, higher performance than BTC. So we take, if BTC was a 60-60 type instrument, 60 vol, 60 performance, we aim to create a 90-90 equity,
Hmm.
because some people want 90 ARR and 90 vol. And then we aim to give somebody else maybe we want to give someone else the 60 ARR 40 vol, you know, with a
Yeah.
strike, or with a convertible thing. And maybe we want to give somebody else the 30 ARR 30 vol type instrument. So we're giving people different tranches of volatility, risk, and return. And then, of course, the equity itself is the building block for a whole host of derivatives. So you can build the entire options market, and there's like a massive, like $70 billion open interest in the options market. And then you can build other ETFs, right? The levered ETFs, the volatility interest generating ETFs, the short ETFs, every other flavor of derivative. And our position is, our job is to do what everybody else can't do. So, for example, you can sell, if you're a trader, you can sell covered calls all day long. So I'm not going to do that because you can. What
Hmm.
I'm going to do is create a convertible preferred stock because you can't.
Hmm.
So what we're doing is we're creating those various securities, everything from a pure currency swap. Like, for example, if I give you 10% interest and you give me back money, and I'm generating BTC yield and you're generating USD yield, that's a pure currency swap. I could do that in Canadian. I could do that in yen. I could do that in euros. I can do that in USD. So that's one type of security. And then above it, I can create the convertible, various flavors of some yield, some conversion rate, all the way up to, pure Bitcoin, or high octane, high leverage Bitcoin. And for us, we're always going to aim to make the equity like 1.5 to 2x Bitcoin. And I can't, it's not clear to me how I get much beyond that. But then we leave it to the rest of the financial market to concoct 2x to 200x leverage by using all of their option interest, option tools, etc. And at the end of the day, the result is everybody gets the flavor of volatility, the amount of volatility, the amount of performance, the amount of risk that they want in a liquid fashion on a compliant marketplace, right? That's our mission. It's not going to change, right? Everything we're doing, you can do at the scale of $100 billion enterprise, or $200 billion enterprise, or $400 billion, or $800 billion, or 1.6 trillion, or 3.2 trillion, or 6.4 trillion, right? It's pretty much the same exact structure. You're just creating more of each type of security. And the thing that makes it possible is that you're building on top of a foundation of a digital scarcity, which is a
Mhm,
commodity,
mhm.
which itself, right? Bitcoin can scale from 2 trillion to 20 trillion to 200 trillion. So to 400 trillion to whatever trillion, right? So everything is very scalable in all directions as long as you maintain a balance in the capital structure between the various instruments.
Yeah, yeah. And